Breaking news. Anything can happen in this final hour. And look at this. The Dow Jones Industrial Average is at a new intraday high, up almost 170 points. It's not the only winner today. Oil prices at $76 a barrel after government data showed that crude inventories fell last week. There was big demand. The S&P 500 energy sector, it's up 49% this year. It is the top performer of the year. Fueled by, yes, crude oil prices surging, but also natural gas prices. Nat gas up 47% year to date. So we ask, what does 2022 bring for black gold? And we bring in Tortoise portfolio manager Rob Thummel and Liberty Oilfield Services chairman and CEO Chris Wright. Gentlemen, thank you for joining us.
Thanks for having me.
Good afternoon.
Good afternoon. Rob, I mean, Omicron, what? Demand for oil, demand to go places is there. What do you see in the new year?
Yeah, so if you think about what are we going to see next year, and I think a lot of people think we're going to see inflation, we're going to see rising interest rates. So what sector in the S&P 500 does well under that scenario? Well, the energy sector historically has. And so I think the energy sector is set up really well to once again outperform the other sectors in the S&P 500. Driven by really an economic recovery that ultimately needs more oil and gas and, unfortunately, coal. So we see some very strong returns driven by cash flow in the investors' pockets. That's the most important thing, is the free cash flow yields, the dividend yields of the energy sector are double and triple of the S&P 500, and that'll be a driver.
And Chris, Rob just said it, the world needs more oil. So talk to me about supply. Can they get the oil that they need?
Yes, absolutely. The U.S. could grow our production significantly of oil, of natural gas liquids. And of course, higher prices is going to drive that. But it's going to be muted at first, both from investor concerns about poor returns the last decade. So our industry is going to be more disciplined. And of course, we've got growing government and regulatory pressures that are going to check supply as well. And the ultimate effects of that is just higher prices.
Chris, President Biden is calling you on the phone. You pick up, you say, Mr. President. He says, what can I do to help you get more oil to the market? How do I make this happen for you? What do you say?
Stop opposing our industry. There's all sorts of threats of we don't know what the new regulatory environment's going to be. We're trying not to issue permits on federal lands. Very hard to get new pipeline infrastructure permitted to move oil and gas around. We've seen where that leads. Look at Europe right now. Tens of thousands of people will freeze to death this winter because they can't afford to heat their homes. This kind of government irrationality about energy is very costly for human well-being.
And Rob, let's bring in natural gas here. And correct me if I'm wrong, but isn't natural gas kind of like the transition to green energy because it's more energy efficient than oil?
Yeah, so natural gas is great. It's very versatile, right? You can use it from everything, from cooking, right? You can make your double roasted short ribs with it, or you can use it for complex processes like generating electricity and industrial facilities, right? The other thing is the world needs more energy and less carbon. Natural gas actually generates less carbon. It's half the emissions of coal, but it also is very energy efficient. Natural gas generates more energy, and it is plentiful in the U.S. And so we have a real economic advantage and energy advantage here in the U.S. of having a vast supply of natural gas. No other country in the world has it. Asia doesn't have it. Europe doesn't have it. No other country really has that advantage, and we need to take advantage of it in the next several decades as we transition and really we decarbonize the globe.
Right, and that explains why it's so much more expensive in Europe. Chris, GasBuddy is predicting $4 a gallon gasoline next year. You think we get there?
Hard to say. I would say likely yes. Likely yes. There's still going to be relatively rapidly rising demand for oil. And again, more disciplined spending here. That probably pushes oil price up another $10 or $15. And that probably gets you to around $4 gasoline. I don't know the future, but I think that's a reasonable guess.
Yeah, and I think a lot of drivers are kind of expecting that we'll have to pay that because we've seen what inflation has done to our pocketbooks this year. Rob, you have 3 key energy picks. You want to go through them quickly?
Sure. So back to natural gas, the U.S. has ample supply. Cheniere Energy, largest exporter of LNG in the world. The U.S. is going to become the largest LNG exporter in the world. We think that's a great way to play the growing demand for natural gas. Western Midstream Partners, another energy company, high dividend yield, 6% dividend yield. Investors want a lot of income. They're going to need a lot of income for several years to go. And then Chevron. Chevron is an interesting story as well. Chevron is actually not only producing oil and gas, but participating in this global energy decarbonization. And that is really important, I think, for a lot of energy companies. How do companies participate in the global decarbonization trend? A lot of energy companies have articulated the way that they're going to do it. And as more and more investment is made, I think you'll see investors return back to energy stocks because of the strong appeal and the strong fundamentals that support all of these stocks.
Rob, Chris, we thank you for the time. Happy New Year.
Thanks, Lauren. Happy New Year.
To you.